All right, traders, within this video, we're going to be doing an in-depth price action analysis on the SPY. This is going to prepare you to trade the SPY for the rest of the week. We are going to be going over how to trade the best setups at the best prices, along with the top stocks that I'm going to be watching into this week. We're going to be discussing upcoming earning plays as well. Within this video, we're going to be going over the SPY. We're going to be going over Crocs. We're going to be going over K. Those are going to be the upcoming earning plays, those two. We're also going to be going over Walmart, Tesla, Pinterest, Run, Tiva, Roku, and AMC. These are going to be the top stocks to be trading into the rest of this week. This video is going to prepare you to trade the best setups at the best prices. I'm going to give you the trading plans. These are meant to be scalped, very quick in and out sniper opportunities, very lucrative trading opportunities at the best prices with these option contracts. Let's get straight into it. So first things first, let's go over the SPY. So the SPY has now been trading in this channel for 3 days straight. And if you've been studying this pattern it did the same exact thing that it pretty much did yesterday, where SPY gaps down and then it bottoms out very early in the morning. It starts ripping back up. To close the gap. And then once it closes the gap, it has a small little breakout and a nice reversal for puts. Small little breakout and a nice reversal for puts. Then it retest 413, which was last Friday's highs, and sells off. So you can see the SPY did the same exact pattern that it did yesterday, except today it ended up closing weaker and lower than it did yesterday. With that being said, in terms of how the daily chart is looking, we've been in a daily channel for 3 days straight. We've been topping out at this key resistance. We got a lot of resistance at this 411.74. You could see the SPY was trading in a channel slightly higher towards this 415 range for about a week, and then it sold off. How is the SPY looking now? How does this look overall? Overall, it looks micro bearish. It looks like SPY wants to fill this gap at 406.07. I'm not saying it's going to occur right away, but I would say this week we are expected to fill this gap at 406.07. Overall, we're going to be trading in a range. So in terms of this range, this is what I want you to focus on. These are going to be our best levels for range trading. So in terms of key breakdowns for the past 3 days, if you've been buying put options and kind of holding a little bit towards key breakdowns, you've been getting hurt. So in terms of SPY, you're going to want to focus on resistance. And, in terms of the best resistance levels, the range would be 412 to 413. It's a 3-day range. Those would be the best resistance levels for puts. I strongly believe if we retest 412, 413, and you get those bearish confirmations, you get those bearish wicks. You could see right here, these are the wicks we look for. Hits 413, drops a little bit, lower highs. Highs of these candles are now the previous support, which is bearish. It's forming lower highs. It's forming the wicks, right? Great opportunity to scalp puts. So as long as you see the bearish confirmations, I would focus on put options like I've been saying at 412 and 413. Now, here's another thing that I want you to understand in terms of the SPY. Your overall support is going to be towards this 406.80s. Like I told you guys in the last video, SPY is expected. I told you guys if you want to buy calls, buy towards the gap. There's a gap to fill at 406.07 in terms of this week. That's where you'd want to buy calls. Today, it almost filled the gap. It got to a low of 407.54. Got to a low of 406.82, and then it had a partial gap close reversal to rocket to fill the gap. So if you were basing your trades off this channel and off of what SPY did yesterday, it should have overall been a green day. I'm going to be going over the mistakes that I made today. I made some trading mistakes. Unfortunately, it was a red day. I'll be discussing that towards the end of this video. But in terms of what I want you to focus on, put options in between the range of 412 to 413. The price right now is at 408. I would stay away from key breakdowns. I would not focus on key breakdowns. I would wait for the pumps back up towards resistance heading into the rest of this week. In terms of call options, I would look to buy calls at the gap. There's a gap to fill at 406.07. Once the SPY hits 406.07, that is where you're going to want to scalp some call options on the SPY. So 406.07, look to scalp calls with a max risk of right here. This is where the max risk would be on those calls about $405.50. 405.40, 405.50, risk no more than that. That's going to be the dip buying opportunity for the week on the SPY. 406.07 overall should kind of continue to trade in this range. Now, at some point, whether it's this week or next week, we will see a move outside of the range. So what I want you to understand is, in terms of speaking for the move outside of the range, if the SPY cracks 406 and it reacts as a resistance level, we will on track start to turn really micro bearish and within time fill this gap at 390.89, which is the best price to buy calls once it breaks down out of this micro range. Now, if it breaks above the micro range, if we break above 413, close strong, turn it into support, it will be on track to pump to fill the next gap, which would be right here at 417.39. So I want you to understand, we've been trading in a 3-day range. The best price for puts is 412 to 413. The best price for calls is 406.07. At some point, whether it's going to be the end of this week or into next week, we're either going to break out or break down. When that occurs, this is what you should expect. If 413 turns into support and breaks out, you should be micro bullish and it will be on track to fill the gap at 417.39. If 406 breaks down and reacts as a resistance, should be overall bearish, and we will be on track to go back to low 400s and then within time fill the gap at 390.89. This will truly be the best price for call options, 390.89. If we can get there, the sooner the better. So that's the range. That's the expectations. You could see where we're at in terms of the daily chart. We're due for some downside potential. This is not a bullish candlestick on the daily chart, and it is the third day we failed to break above and hold 413, and SPY is forming lower highs, and it is closing weak. But like I said, I would try to avoid key breakdowns, and I would focus on a resistance level. Now, if you were to play a key breakdown, I don't recommend it, but if you were to do it, this is the key level that I want you to understand in terms of tomorrow. $408.06, the closing price of today, which would be the previous closing price of tomorrow. If 408.06 reacts as a resistance level, it starts breaking down, SPY will get crushed to fill the gap at 406.07, which is where the SPY can see a reversal. That will be the make it or break it level. Heading into tomorrow, your make it or break it support levels are 408.06 and 406.07. Those are your make it or break it support levels. If 408 cracks, it goes to 406. If 406 cracks, it really starts to sell off hard. If 406 holds and it starts bouncing, then this will pump back up towards resistance, right? So just study this pattern. SPY gaps down, it rips back up to fill the gap, goes slightly higher, sells off. SPY gaps down, it rips back up to fill the gap, and it goes slightly higher, right? So if you base these trades off of history, you will have a time frame of when it is expected to start bottoming out and ripping back up fairly early in the morning, typically like 9:50 a.m., 10 a.m., around that time. It fills the gap, goes slightly higher, nice little reversal for a scalp, rips higher to 413, nice reversal for a bigger scalp, right? So just pay attention to the patterns. That's if SPY gaps down tomorrow, right? So your key levels, 408.06, make it or break it. And also your make it or break it level is going to be 408. So those are going to be your key levels for the SPY. With that being said, we are now going to be going over the top stocks that we're going to be watching. So Walmart. Let's discuss Walmart. So in terms of Walmart, what we're going to be focusing on is this 132 make it or break it level. Walmart is starting to see signs of weakness. We're starting to see signs of weakness in terms of Walmart stock. Remember, it wasn't too long ago that the previous support right here, which was 132 to 133, cracked, big downside potential, massive gap down, big downside potential, history repeat itself, right? So in order for Walmart to turn bearish, it needs to crack 131.50. If we can start cracking 132, 131.50, we take out those support levels, it's going to flip micro bearish. If it continues to hold 133, the bulls will be in control, break above 134 and start to rally again. So that's what I want you to understand about Walmart. We're at a make it or break it level. You could see it right here. If it starts to go under 132, you're going to want to play some puts for that 132 key breakdown. So pay attention. That's the make it or break it level. If it breaks above 133, turns that into support, then it turns bullish. If it breaks below 132, then it turns bearish. That's at a key level and it did have an overreaction to the upside. So as long as we can crack 132, it should start to flip micro bearish if we can get that crack. So keep an eye on that 132, 133 zone. 133 reacts as support, it goes bullish. 132 reacts as a resistance and it cracks, it goes bearish. Keep your eyes on Walmart stock. In terms of earnings, I am planning to take a YOLO. These are high risk. These are lottery tickets. You can lose everything you put in very, very easily. So if you do take these size accordingly, I am planning to swing trade CROX put options tomorrow. I'm most likely going to be entering the swing trade right before the market closes, holding through earnings. Earnings is expected to be on Thursday before the market opens in the pre-market. So we'll see. Overall, I'm bearish on Crocs. I think it's going to sell off holding through earnings. And same thing for Kellogg's. I'm bearish for Kellogg's as well. I think it's going to sell off into earnings. Now, let's discuss Tesla. So in terms of Tesla, and remember the options that I trade, it's the closest strike price that is at the money, right? Closest strike price to at the money. I don't go far out of the money, and I typically go with the closest expiration. If not, then typically the second closest expiration, the second leg. So Tesla. In terms of Tesla, I want you to wait. I want you to wait until this key level. This is where we're going to scalp puts. 952.62. It fills the gap. Look for the reversal. Look for the bearish confirmations. Scalp puts on Tesla at that key level for a nice downside move, quick 20, 30 point drop. That's what we're waiting for on Tesla. That's going to be an amazing setup. Be patient. Wait for the opportunity. Now, Pinterest. Man, I had a good trade on Pinterest today, but unfortunately I wasn't patient enough and I didn't like the way it was moving. I did play Pinterest put options early in the morning when this was at $23. I bought puts. And then, I was trying to be patient. I just lost my patience. I didn't like the way it was trading. It was consolidating. It was too choppy for 30 minutes. I gave up on the trade, took a small 4% loss on the contracts, barely down on the day. And then it's just started to sell off. This one was a nice one, man. It was that gap close reversal. If you watched yesterday's video, we discussed it. I told you guys, if Pinterest fills this gap at 24.20, which it did, and you see it react as a resistance level, which it did, reacted as a resistance right here, confirmation to add. Gravestone Doji formed a Gravestone Doji, very bearish at lower highs, and then it really started to sell off, man. Those puts would have done at least 30%. But unfortunately, I just cut it because I didn't like the price action. I didn't like the choppiness. I'm used to SPY. When I get in SPY, it either rips or it dips. You don't have to be super patient with it. The quick move tends to happen fairly quickly. This stock's a different story. It's slow and it's choppy, and I didn't have the patience for it, and it's not my style, but the trade would have worked out. The gap close reversal to fill the gap below strategy worked out very nicely. It filled that gap from 24, opened up at 23.77, formed a Gravestone Doji. You see this Gravestone Doji at resistance, at lower highs, this great candlestick. It is going to be bearish, and it's going to continue to drop. It formed right here. It sold off. Formed right here at resistance, lower highs, previous support, sold off. Pay attention to that trend reversal doji. That was a good play. As of now, I'm not really too interested in it for the moment. I'm going to be on the sidelines. I will say this. Write these price alerts down and save them. Right here, $17.25. Buy calls on Pinterest at $17.25. It will happen. Be patient. That's where you buy calls. All these price alerts I'm giving you, these are the best setups at the best prices, and these alerts will trigger eventually. You set these price alerts, they're going to compound over time, and then once they trigger, you execute the trade once you get the reaction that you're looking for, right? So we'd obviously be looking for a bullish support reaction with nice dojis, nice candlesticks, consolidation, small bounce at that level. That's where you want to buy Pinterest. As of now, I'm on the sidelines. I don't like how it's trading. It's choppy. Overall, I'm leaning towards bearish. Run. I want to buy some put options on Run. So the game plan with this is what I'm seeing, and I'm putting you on to this pattern. Look at this. We are at major resistance, right? Major resistance that was formed in March. Look at this. Nice green candle, nice green candle. Same price, same price. It gaps down, it gaps down. The next day, overall, it pushes back up. Once it goes back up to fill this gap, right here, went back up to fill the gap, had a reversal, sold off hard, and cracked support. I'm looking for that history to repeat itself. This is overextended. we need to look for another put option opportunity on run stock. There's a gap to fill above at $32.69. Set the price alert at $32.69. If you see it struggling, react as resistance, buy the put options. So if these key levels hit, and if they don't react the way you want them to react, don't enter the trade and reset the price alert. Set the price alert again, because later on that alert can trigger again. And then if it reacts bearish, then you can enter the puts there, right? So these are always key levels. It's just you have to study how they react. If it reacts as a rooftop, a resistance level, then you try it in terms of puts. If it reacts as a floor, a support level, then you try it in terms of calls. These are key make it or break it levels. They may not react the way you want to at first, and you're aware of that and you recognize that so you don't trade it, but set another price alert. Continue to watch it, continue to study it, because once it reacts the way you want it to, that is when you're going to want to be on this trade, and it might not happen right away. That goes for everything with all my key make it or break it levels. Pay attention to run stock. All right, Tiva stock, similar setup to run. There's a gap to fill right here at 1018, which is 52-week highs. We're waiting for this gap to fill. Once it hits 1018, we're looking to scalp some puts. It's overextended. It's due for an overreaction. Look for the bearish reactions, right? Very simple. Bearish reactions are very, very simple. Bearish pins, lower high breakdown, very simple, man. This is what we're looking for. It hits the key level, forms a double top, forms the doji, forms the lower highs. These are all bearish confirmations right here. We knew SPY 413 was the best level. This is a double top. That's a doji. That's a bearish trend reversal candlestick at resistance. And then these are your lower highs. All confirmations to be buying puts, right? In terms of SPY, this was a very bullish confirmation. I want you to save this candlestick, and I want you to start using 30-minute charts as well. If you see this candlestick right here, this is a 30-minute candlestick on the SPY. If you see a 30-minute candlestick like this on the SPY, it is going to continue to go up for the short term, especially if it gaps down. So what I'm telling you is pay attention to the 30-minute candlesticks. If you see they open up every single 30 minutes, if you see it form a bullish pin of bullish hammer, it will likely continue to go up for the short term, right? So pay attention to the 30-minute chart. This candlestick I'm giving you with the 30-minute at support, remember that key 406 level we talked about yesterday? It formed this bullish hammer, this bullish doji. That is a key confirmation that I want you to save and understand that if that happens on the 30-minute, it'll likely continue to go up for the short term. So save that as well. And our next stock is going to be Roku. And remember, these are scalps. We get in, we get out, we make our quick 20, 30% return on our options very quickly with the close expiration. And we're scalping these like snipers. Roku's pulling a Walmart where it gaps down and then it just starts rallying back up to fill the gap. Best price for puts on Roku is going to be $85.17. That's what I'm waiting for, $85.17. Once it reacts as a resistance level, look to scalp put options on Roku. Our next one is going to be AMC, which is approaching a key make it or break it level. I want you to pay attention to how it reacts at $17. We have a gap to fill at $17. If it reacts as a resistance, you're going to want to play some puts. Overall, though, it's a tough stock to trade. It's a tough stock to play puts on, in my opinion, in terms of day trading, so be careful. But 17 is make it or break it. If it reacts as a resistance, it sells off to 16. If it reacts as support, it breaks out to the next resistance level, which is going to be 1790. Those are going to be the top setups. The favorite plays that I'm seeing right now in terms of the key make it or break it levels that are expected to hit quickly rather than sooner than later. Some of the levels that I gave you guys are going to hit later, not right away. So in terms of the best ones that I'm seeing right now, Walmart, we are approaching serious make it or break it levels. With resistance, we have earnings coming up later on as well. So Walmart's going to be key. The SPY 406 calls and the puts at 413. And then at some point, we're going to have that big either breakout or breakdown again. So pay attention to those key levels. Crocs puts through earnings. We have Tiva coming up to fill the gap. That should be a good one right here at 1018. We have AMC coming up to fill the gap. That's going to be a tough one in my opinion. We have Run Stock pushing up to fill the gap. That's going to be a really good one in my opinion. And then we're still waiting for Tesla to fill the gap, right? So in terms of the super short term, those are the ones that within time, the price targets, the key make it or break it levels should hit. And then once they hit, we wait for the confirmation and then we seize that opportunity once we get confirmation, right? So that is how we're planning to trade the best setups at the best prices. Now, in terms of my trading today, the mistakes I made was number one, not getting the best entries. But I really screwed up by holding. I held a position too long in the portfolio and it wasn't at a good price. So if you get a bad entry and you hold too long, it's going to be a much bigger loss. And that's what I did. It was an emotional decision. I tried to get out. I ended up scalping SPY puts. I bought puts on SPY. Um, Literally right here, I bought puts when this was at 409.20. I sold into the dip, made a quick 10% return. The returns weren't as big because there was no same day expirations on SPY today. And then I rebought puts right here. I literally rebought puts right here. I rebought them thinking it was going to go back to the lows. This is such a bullish candlestick on the 1 minute chart. There was a gap to fill above. SPY has been, in terms of the pattern, it's been rocketing back up like yesterday to fill the gap around this time. So that wasn't a good idea, but it worked once. I wanted to try it again. I was up 5% right here. I knew it wasn't a great entry. I knew the possibilities of the gap fill. It wasn't this amazing trade. It was meant to be a quick scalp, which is extremely tough to do if you're not getting a good entry, right? And it already worked once, so I was pushing the limits at not a good level to be buying puts. So I bought the puts here. I was up 5% right here. I submitted my order to sell and it didn't get filled. As soon as I sent it out, it ripped. It formed a pin. It didn't get filled. And then it started spiking like rapid fire. Instantly down 12%. Then from there, right here, I was up. I was barely up. I was up like 2%, 1% right here, 1%, 2% right here. I did not sell. I didn't even try to sell. I was so frustrated and so stubborn that I didn't get executed on this pullback here because I knew that, this is trying to turn previous resistance into support. It's trying to form a bullish uptrend. I got to start playing it safe. I got to start locking in. It was holding too long, but unfortunately, I didn't get executed on the trade. Held through the micro pump, but I will say the audacity for me to not sell here was very stupid. That was very stupid on my part to not get out here when I was down 15, almost 15% right here at the peak. Did not exit, continued to hold, was being extremely stubborn, was being extremely emotional. The reason why I did it, I was so pissed off and I was so frustrated that I did not get executed. And that rarely happens to me. One thing about trading options with Webull is you cannot use market orders due to market volatility. They do not allow market orders on trading options. That's what I dislike about them. But I will say this, my experience with them, I never have a problem getting filled in terms of the way I trade options if I'm trading on my phone. In terms of me trading on my phone, I am lightning speed. It's what I'm used to. It's what I love doing. I was trading live on stream using the desktop platform and it completely fucked me over today. So moving forward, I'm just going to, trade live on stream, but I'm going to execute the trades on my phone. They'll still be able to see my open positions, closed positions. They'll still be able to see the account portfolio in my charts and everything, but I'm going to execute the trades on my phone. I'm also going to look into to see if they have some sort of feature where you can submit a limit order above the ask. If you can do a custom limit order, I know they have custom orders, so I'm going to see if you can do it with options where if I can submit a custom limit order to buy maybe 5 cents above the ask, submit it like 5 cents above the ask when buying, and then submit it like 5 cents below the bid when selling, right? That's something I'm going to look into because I don't care if I pay a little bit more in premium. If I'm trading a very liquid option with a very thin spread like SPY, I don't care if I'm submitting above the ask when buying and below the bid when I'm selling. And I'm pretty sure you can do that on the desktop version where it's custom filtered to submit the order that way and you just click a button. That would be the fastest way to do it. If not, I'm just going to trade on my phone. I'm going to look into it tonight. It has to be a custom made order to set the button with the active trade where it's like 5 cents or 10 cents above the ask when buying, 5 cents, 10 cents below the bid when selling. Now, if you do that on SPY, I'm going to get good fills. I'm not going to get those terrible fills. But if I do it on other stocks with wider spreads, I will get terrible fills. So just keep that in mind. But that's the game plan. And I'm doing that to ensure that when I submit the order, the moment I click the order, I have the best possible order out where it's basically impossible for me to not get filled. It's basically impossible. That's the game plan moving forward. Because I'm telling you, it's the worst feeling when you trade options. You try to exit for a nice scalp. You get in, you get out, nice win. And then it just goes against you within a couple seconds and you do not get filled. It's the worst feeling. There's ways to prevent that. And I just explained to you how I'm planning to prevent that by buying about 5-10 cents above the ask, selling 5-10 cents below the bid. In terms of manually doing it, I can do it so much faster manually on my phone than on my desktop. There is a way to press buttons and stuff like that. So I am going to see if you can connect a custom limit order button with the Webull platform, 5 cents above the ask when buying, 5 cents below the bid when selling, but it has to be with options. I'm going to look into it tonight. I'm pretty sure you can do it, but I have to see. So those are the main mistakes, right? And another problem that I had today is, so the portfolio is down. Today was a bigger red day, and that was the main reason why, being stubborn, holding for a big loss, just purely frustrated. I took big position sizes as well. So the portfolio is back to 5,500. It started with 3,940. If you do take big position sizes, this is the problem with doing it. Your portfolio is going to see a lot of chop. It's been wasting my time chopping for about 4 days now, just chopping back and forth, trying to figure out if it wants to hit new all-time highs or go back down towards lower profits. So that's the main problem with big position sizing. There's a right way to do it. There's a wrong way to do it. This was the worst way possible to do it because the entry was poor. If you are not getting a good entry, the trade is meant to be a laser quick scalp where you get in and out within seconds to minutes. It is not meant to be held. And this was such a bigger percentage loss. It was 30% loss because I was holding at a very poor price. And if I were to just focus on the 30-minute chart right here, this was screaming bullish. And if I were to look at yesterday's pattern, screaming bullish to fill the gap, right? This could have been a very easy and very green day for the small account challenge. But unfortunately, I held too long. I did not get executed. That was the main mistake and the main reason why I held too long, just being so stubborn, so frustrated and emotional about, not getting executed and just being pissed off and to continue to hold the position. The biggest mistake was not getting out here when I was break even. If you're down 10-15% and then all of a sudden you're break even, it's best to start scaling out of that position, especially if you know you don't have a good entry. I know my entry wasn't good. It was meant to be a quick in and out scalp like I did here. I got puts right here, exited right here. Nice 10% return. I was going to do the same thing right here. And as soon as I got in, had a small pullback, I was up 5%. Tried to exit, down 15%. Didn't try to exit when I was up 1% here. That was stupid of me because I knew the entry was poor and it was trying to form higher support, turn previous resistance into support, right? Worst thing you can do is hold at a bad entry. Hold at a bad entry, take big position sizes at bad entry, right? There's a time and there's a place for a big position size. Must be at resistance with puts. Must be at support with calls. Best prices only with bigger position sizing. Those are the ones where you can hold a little bit longer. If you're just trying to scalp in, scalp out, the position size has to be smaller and you cannot hold. That's the mistake I made. But that wasn't my intent. My intent was to exit here. And I didn't get filled, which threw my intent out. It threw my intent out the fucking window. Got emotional, got stubborn, let my loss run. Didn't realize how much of a blessing it was to even be up again when I was down 15% and to not cut more. Just trying to be right and trying to be completely stubborn. And that's how you lose in the market. If you try to be right at poor prices and hold when a scalp is not meant to be held at a poor price with big position size, it's going to be a big loss. And those were the mistakes that I made today. If I would have just cut the loss quickly, or if I would have just sized in accordingly, I could have entered puts right here. I could have entered puts right here and banked. But unfortunately, this was, again, one of the biggest mistakes that I made today. I took a huge position size at a terrible price. So again, if you're taking these big position sizes, your portfolio is going to be chop. It's going to be up and down, up and down, up and down, constant highs, constant lows. It's not really going to go anywhere unless you're getting amazing entries. You're cutting your losses super quick. You're entering the best trades at the best setups. Puts right here, we know that isn't the best price. We know that isn't the best setup. That's just a quick in and out scalp, which you can do. Not the best thing to do, but if you're going to do it, it's not meant to be held. It's not meant for a big position size. I held and it was a big position size. That's why it was a big loss. Poor entry, big position size, and I held. Not meant for a big position size, not meant to held, right? So these are mistakes I made. And the reason why I made those mistakes is because I did not get executed. I did not get filled. That is why I didn't get filled. I was frustrated. I was being stubborn and I was pissed off and I just wanted to hold it. I was so mad with that situation because it would have been a very nice day. And I was already up on the day because I had a nice 10% win right here. But I gave it all back and more in terms of today's trading results. You know, the portfolio went from $6,400 to $5,530 today. With that being said, I need to get back to doing the right thing. I need to start, getting better entries, sizing it accordingly. That's the biggest thing that I've been doing wrong lately is the sizing. The sizing has been off. There's a time and there's a place to add to a position. And, you got to scale into that smartly. And you got to get the best entries when doing that. And you got to understand when there's a time to hold and when there's a time to not hold. If it's at the best resistance level possible, then yeah, it's smart to hold a little bit because it will likely sell off. If it's at the best support level possible, then it's smart to hold a little bit because it'll likely bounce back. But if you're trading at poor prices, man, trying to buy calls at the top or buy puts at the bottom, you can't hold very long. You can't take big position sizes. It's meant to be a quick scalp, and I didn't get executed, unfortunately. So that quick scalp turned into a hold, which was never meant to be. And people were aware of that because I entered the same trade before that. I bought puts right here. 5 minutes later, made 10%. Did the same thing right here. Was up 5%. Tried to sell. Didn't get filled. Fucked up my entire day. That was the biggest problem for today. So here's what I need to work on. I need to work on if I'm going to take bigger position sizes, so keep the range in between 10 to 20%. Sometimes 30% if the setup's just phenomenal. I need to understand, when to be taking a bigger position sizes, which is at the best prices possible. That is when with the best setups, right? I need to make sure in terms of scalping and holding, in terms of scalping, if it's not the best entry, get in, get out lightning fast. If it is the best entry, hold a little bit longer. Aim for a slightly bigger win. Scale into the trades that are meant to be held longer at the best prices. When you're certain, when you enter a trade and you know it's going to go in your favor, you're holding the position and you know it's about to go in your favor, and the entry isn't too far off from your initial entry, maybe you're down a little bit, maybe you're up a little bit, that is when you add. When you are certain, after you get into the trade and you hold the position, and then you are certain, you get more confirmations and you know it's about to go into your favor, that is when you add to your position size. That is when you want to do it. And you want to make sure that when you're doing that, it's not too far away from your entry. If you're down, 5, 10, 15% and you get that strong confirmation, then that's great, add. But if you're up like 10% already, don't add. If you're already up a decent amount, do not add. If you're down like 5%, 10%, and you get that strong confirmation, add into it. If you're at break even and you get that strong confirmation, add into it. If you're barely up and you get that strong confirmation, add into it. If you're up like 5% plus, do not add to it. Do not add to it, right? So that's how I would add in that situation. Just want to bring all awareness to this. So I have to get back to sizing in accordingly. The problem with the cash account lately has been I've been sizing in so big where I can't take more trades with the cash account because I used up all the cash, meaning I didn't have the opportunity in terms of my cash account. With my other margin account, I had the opportunities, but in terms of the cash account, the small account challenge, I didn't have the opportunity to buy puts here and to buy puts here. And if you were to base those trades off of yesterday's charts, those were all confirmations to be buying puts. I told people right here, I literally told people, best price for puts is at 413. I also told people right here at 10:53 a.m. I told people literally puts. I alerted this within the watch list section, but I used up my cash for the cash account, so I couldn't take advantage of it in the small account challenge. But right here, this was a good alert that I had today. At 10:53 a.m., right here at 10:53 a.m., where was it? This is where you should try puts for a tank around 11 a.m. That was at 10:53 a.m. It should tank around 11 a.m. Right here at 10:53 a.m., that was literally the top. It went from 411 to 409.50. Puts would have done at least 20% plus from that entry. It would have been a phenomenal green day, even if I held. The point is, like, so I could have sized in, like, 10% of my account right here. Lost 30, let my loss run, lose 30%, 3% loss on my account. Then I could have sized 10% right here, made it all back and more, or I could have sized in 20% here. Why not take a slightly bigger position size because it's at such a better price level and make back even more, right? So the edge is in the position sizing. Your edge is in position sizing and risk management. Your edge is in scalping. Your edge is in trading the best setups at the best prices. Your edge is using the confirmations that I teach to you in these videos. You have to understand, I'm going to try my best to trade at the best of my abilities, but at the end of the day, we are not robotic. That does not mean that I'm going to follow my rules. That does not mean I'm not going to, be emotional in certain situations, in certain trades. Today, my trade turned into an emotional situation because I didn't get filled at where I wanted to get filled in terms of my exit. And then it turned into a loss and I was frustrated and stubborn and held the position, right? But at the end of the day, you need to let that go and play it safe and get out. Even if things didn't work out in your favor, you got to move forward no matter what. But yeah, I just want you guys to understand, I'm going to give you the best prices and the best levels. And those are the levels that you need to be focused on, need to be trading at. You need to be self-sufficient. You need to be trading for yourself. If you're watching me trade, if you're watching someone trade live, you should have the education and awareness to see if what they're doing is right or wrong. We should all have that awareness and education. We should not be blindly following anybody. We should understand how to trade the best setups at the best prices on our own. We should be self-sufficient. We should have the awareness to see if someone enters a trade that's not a good entry. We should have the awareness to see if someone is holding a position and that's not a good entry to be holding, and it flipped the other way and it's not safe to hold. We should all have that awareness despite what anyone says, right? And I'm going to teach you it. Now, that does not mean when I'm trading in real time that I'm going to be 100% spot on. I'm going to follow all my rules. I'm going to be super disciplined. There's got to be off days. And all I can do is try to improve and try to be better. But at the end of the day, it is up to your job to be self-sufficient and to have that education and to not let others blindly, sway you away from what you're supposed to be doing, right? This is why you should never blindly follow anyone, even if they're an amazing trader. You must understand why they're amazing trader. You must understand their trading style. You must understand when the bulls are in control, when the bears are in control. You must be self-sufficient is what I'm trying to tell you, right? Now, if you do want to become self-sufficient, the opportunity is here. If you want to join Trader Society, it is going to be the first link in the description. You click that first link. Everything is explained on the page. You get access to the small account challenge. You get access to the video lesson library, which is where you're going to learn how to trade the best setups at the best prices. You get access to those unique price action trading strategies that I've created that are going to show you how to scalp calls, how to scalp put options like a sniper, in and out. You can take a position size of 10% of your portfolio, make a 30% return on the contracts. You just made a 3% return like that to risk 1% of your account, right? And then you can continue to scale and continue to compound. Pull out a compound interest calculator, type in your account size, put in 2% compounded daily, and see how fast that account will compound within the next 1 to 2 years if you can consistently pull off a 2% return daily. And it's not the hardest thing to do. I'm telling you, it's all your edges in risk management, position sizing, trading the best setups at the best prices, making sure you cut your losses quickly, never hold a loss longer than your average winning time, and sizing in accordingly, 10 to 20% position sizes, right? If you size in too big, your account is going to continue to go sideways and have these sharp highs and sharp lows. It's not stable. And there's a right way to size big. And that's something that I'm working on personally, is a better way of taking bigger position sizes. But you don't need to do that. Stop trying to get it so fast. Small, consistent base hits, 1% return here, 2% return here, 3% return here. Compound that count, your life can change in 1 year. So yeah, it's going to be a base hit approach to trading options, a more conservative way to trade options that can lead to massive gains within the next year if you compound the small account. There will be certain trades that are meant to be bigger position size, not required. 10 to 20% position size is what I recommend. You guys see, I was doing so amazing when I started the challenge. Lately, it's been chopping. These past 4 days, it's been chop, high, low, high, low. It's been chopping from 6,500 to 5,500, just back and forth chop, wasting my time. Why is that? Because I'm taking such big position sizes, but it's not just because of that. I've had some poor entries and I've held too long. That is also why. But if my position sizes weren't big, it wouldn't be that big of a fluctuation and it would be a lot more stable and stability. So with that being said, if you do want to be a part of Trader Society, you get access to the video lesson library. You learn risk management, position sizing, psychology, mindset training, the unique gap trading strategies, the price action strategies. You do also get access to live trading streams that I do every single day at Market Open. You get to see me trade live, see my portfolio, see my open and close positions. You also get to see and hear the voice channel, real-time voice commentary on the voice channel. That's real-time voice alerts, real-time trade alerts in the Discord server, the Discord community, the Discord chat room. There's a lot more to it. If you want instant lifetime access, now is the best time to join. It's going to be the first link in the description. You also get access to the watch list, the stock ideas, the real-time trade alerts. There's a lot to it. So if you want to check it out, I'm telling you, we've got people in here crushing it. And like I said, the ones who are doing the best are using the education from what they learn in the program. They're becoming self-sufficient and they're trading the best setups at the best prices on their own. They can do it on their own because they've learned how to do it. They're not blindly following anyone. If you blindly follow someone and they're not doing what they're supposed to be doing, you're going to get terrible results. And I will have off days. But with that being said, big shout out to the members who were self-sufficient with the trade. Look at this. SPXW, put options, 700% return. Who's making a 700% return? That's crazy. That's like putting in, $100 and then flipping that to $770. Absolutely insane. JD's, one of the most consistent traders within Trader Society. Every single day, he's green. How is that possible? I'll tell you how. He figured out an edge. And what I'm telling you is one of the biggest ways to sharpen your edge with options is position sizing. It's position sizing, understanding how position sizing works. You can be on a small little losing streak with 10% position sizes, cut your losses quick. And then if you scale up to 15, 20, make it all back like that. There's different strategies with position sizing. If you're sizing in too big, you won't have an edge. You won't have stability. You won't have consistency. You have sharp highs and sharp lows, lots of chop, and most likely a sharp downfall. Be consistent. Find the edge. If you want to find that edge, it takes a lot of experience, time, and practice, and a lot of experimenting. And you do that by taking super light position sizes. That is how you sharpen and find that edge. Once you have it, you have it. Once it clicks, it clicks. From there, it's just building discipline and mindset to follow it. I'm telling you, these options trading, they have that edge. They have that way to minimize your risk. This is why I love them so much that stocks don't have. You got to trade the options. Look at Bob's account, $57,000 profit. That's insane, man. That's like more than 150, almost 150 times the cost of Trader Society, which a one-time lifetime fee. His portfolio's up 500%, man. He's been killing it. SPY puts today, he absolutely crushed it. Look at this. He ended up playing SPY puts 411 for a 50% return, $22,000 profit. He also crushed it on GameStop calls. Absolutely killing it. Big shout out to you, Bob, man. And he has that awareness. He called me out in chat today. He even called me out in chat today on some of the commentary. He has that awareness. He has that edge, right? He has that education. So big shout out to him. Frank recently joined the program. Very nice. 28% return on SPY options. So if you do want to be a part of it, it's going to be the first link down below in the description. You could start trading with us live tomorrow at Market Open. I will see you then. It's the first link down below in the description.